Good morning, I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Monday, December 13th. Strong gains overseas and lots of M&A activity are lifting sentiment on Wall Street. Stocks are likely to extend their gains at the open after the S&P closed at its highest level in more than 2 years on Friday. Markets across Asia are broadly higher, and the Shanghai Composite jumped nearly 3%. China stopped short of raising interest rates over the weekend, despite posting its fastest inflation in 2 years. However, economists expect multiple rate hikes next year, after China's leadership signaled greater emphasis on price stability next year.
The major European markets are posting solid gains. London's FTSE 100 is being helped by a 5% jump in shares of the energy equipment maker Wellstream. It's being bought by General Electric for $1.3 billion. Wellstream reportedly refused GE's first offer, but it intends to recommend shareholders accept the improved bid. GE is set to open higher on the news. A couple other M&A deals in the healthcare industry. Thermo Fisher is buying Dionex for more than $2 billion in cash. Dionex makes laboratory products and will help Thermo Fisher expand into Asia. Both stocks are rising in the pre-market. And the French pharmaceutical giant Sanofi Aventis extended its $18.5 billion offer for Genzyme for another month. But Sanofi did not change the terms of the bid, which Genzyme thinks undervalues the business. The takeover battle has been going on for months.
Updating a story we told you about last week. Dell announced today that it's buying Compellent Technologies for about $960 million. Both stocks are losing ground this morning. On Thursday, Compellent fell nearly 15%. Because shareholders thought the potential purchase price was too low. Dell now says it's paying $27.75 a share for Compellent, just slightly higher than the price that was reported last week. Also, keep an eye on shares of Hormel Foods today. The company's board authorized a 2-for-1 stock split, its first in 10 years. Hormel is set to rise about 1% at the open. But Walmart is slightly lower in the pre-market. The world's biggest retailer is shutting its business office in Moscow, saying there's no clear Russian acquisition partner in the near term.
Goldman Sachs is making some calls on several technology companies this morning. It resumed coverage of Dell and Hewlett-Packard at sell. Goldman placed a new neutral rating on Xerox and resumed EMC at a buy. Apple fared the best among tech stocks, getting back on Goldman's conviction buy list. Meanwhile, Origa assumed a buy rating on Broadcom, and Piper Jaffray raised JDS Uniphase to overweight. Analysts are also weighing in on the telecom sector this morning. Citigroup said it's buying Sprint into next year, pushing those shares up more than 3% in the pre-market. But Morgan Stanley is wary of investing in Research in Motion. It says the BlackBerry maker will suffer its biggest hit from Verizon's deal to provide service for the iPhone.
Keep an eye on shares of Nike this morning. They're jumping more than 1.5% in the pre-market, after UBS raised its rating on the stock to a buy, and Dow component Caterpillar could get a pop at the open, following an upgrade from Atlantic Equities. Shifting to the energy sector, Jefferies boosted its rating on Exelon to buy, but Robert Baird downgraded Piedmont Natural Gas to neutral. Right now, crude oil prices are rising back above $89 a barrel. Gold is also moving higher, back near $1,400 an ounce, as the dollar loses ground against the euro.
No economic news on the calendar this morning, but later this week we'll get readings on inflation, retail sales, housing starts, and industrial production, as well as an announcement on monetary policy from the Federal Reserve tomorrow. That's the latest from Weiss Research. Have a great trading day.